So it's time for our first panel. Europe is facing a green, a digital and a geopolitical transition while recovering from the social and economic impact of the COVID-19 pandemic and while dealing with a new crisis dealt by Putin's war in Ukraine. Our first panel will focus on how the NextGenerationEU fund addresses macroeconomic divergences within the EU. Also, we will discuss how we can solve the dilemma between spending on the one hand to transform economies and financial or fiscal discipline on the other. Please give a warm welcome to our speakers, Graham Bishop, Benedicta Marzinotto and Mathieu Segers. Graham Bishop, from the UK, you are a well-known commentator on financial regulation. You have worked in financial services and have been an advisor to the House of Commons and House of Lords. In 2013, you advised former President of the European Commission, José Manuel Barroso, on the joint issuance of debt, and you were a member of the Maastricht Committee, which prepared the changeover to the single currency. And you are also referred to as a one-man think tank. Yes. So we're very happy to have you here. Yes. We're here to talk about the euro, but maybe we should talk about the pound sterling.
or the lack of it.
Yeah. Are you worried?
Oh, absolutely.
By the slide.
This 30 years ago, not only was a treaty signed here, but as Professor Benedicta said, there were a variety of currency crises. The Bundesbank bought in 10% of GDP of the French franc. That's a huge amount. That's what supported, that's what created, allowed the euro to be created. Who is going to buy in 10% of their GDP of sterling now? Nobody. It fell dramatically in earlier days. It's fallen now. There is no floor. The current account deficit is 8% of GDP. We now have these extra government deficits.
Major tax cuts.
Major tax cuts, that's why the deficit is going up. The DMO, the Debt Management Office, has to sell 1 billion of gilts every day because there's not only the new deficits, there's the rolling over. And as interest rates go up, 10-year gilt yields have just doubled. In the next couple of years, the interest costs will start to really rise. We've got a quarter of the debt is inflation linked. Oh, 10% inflation. Boom.
Borrowing costs are
yes. So this is very frightening. And don't forget, for the EU, we are your largest competitor in many of the markets. So
this will hurt the European economy.
So there is a real risk if sterling tanks and the UK becomes much poorer, but super competitive, it's a real problem for the EU.
What should the Bank of England do? Because we heard Joachim Bietelich say that central banks are independent but not neutral.
By statute, the Bank of England is independent. I suspect that Governor Bailey is not as independent-minded personally, an assumption. The only thing they can do, they can start intervening, but I recall I was on the trading floor at Salomon Brothers in 1992, 30 years ago, when the Bank of England's reserves were run out by the hedge funds in a day. And it'll happen again. The moment there's somebody there who's willing to sell you the currency, they'll buy it all. So the only thing they can do is start putting up interest rates big time, not by a quarter of a point, but by a point and a half or something like that. But for the household sector with very large mortgages, this is
problematic,
to say the least. Very difficult. Don't get into the problem in the first place is the easiest solution.
Yeah, a little bit too late for that. Yes. Benedicta Marzinotto, you are an economist affiliated to the University of Udine in Italy, and you specialize in EU economic governance. You have worked for the European Commission's Directorate General for Economic and Financial Affairs. Welcome. Thank you. I was going to ask you about the outcome of the Italian elections, and then you said, oh, please, save that one for last. Don't get me started. But still, yeah, would you like to comment on the slide?
Yes, it's very early to say. We'll see what the new Prime Minister is going to do. Markets have not reacted. I'm quite confident that this is not going to turn into a threat to the European integration process. for a number of reasons. One is that the Italian government has no interest in getting into a conflict at this point in time with Brussels. We know the ECB has a new tool, an anti-fragmentation tool, which
TPI, which we're going to talk about later.
Yeah, which is quite handy because it's one of those instruments that are activated directly by the ECB. I can't see anything happening in Italy where the Italian government would have to apply for assistance, like in the case of the OMT or the ESM. But having a system that does not require a government, the new government, to be explicit about the need for financial assistance is preventing financial turmoil. So I guess short answer is we will see what she's going to do. She has no interest in getting into a fight with the European Commission or Brussels, and I'm fairly confident that the threat that we might perceive at the moment will, over time, be, in a sense, neutralized.
Okay, so you're fairly optimistic for now.
For now.
Mathieu Segers, you are a historian, professor of contemporary European history and European integration at Maastricht University. Also, you are a member of the Scientific Council for Government Policy, and you write articles for various media outlets. What is your biggest concern regarding the outcome of the elections in Italy and the win for Giorgia Meloni?
It's the normalization of radical politics at home. And I think this is a very important point made by Professor Bieterlich in his keynote lecture. So the national politics, the national democracies, are not really connected to this European integration undertaking anymore. Maybe they have been in the 1950s when you had the double mandate and parliamentarians from member states were at the same time parliamentarian in their national democracy and at the European level. And in that sense, a kind of combining in their own head those two dimensions as part of one thing. But that is long ago. And at the moment, we are very ambitious, at least in words and launching of plans. Implementation is another thing, but we discussed that, I think, in the last minutes quite extensively. We are very ambitious in the launching of plans and words, but we are often also, at the Brussels level, experiencing a disconnect with the peoples in the national democracies. And what is happening there is a radicalization of politics, polarization, escalation. It's a pan-European phenomenon. It's not something special for Italy. We are experiencing exactly the same thing in the Netherlands. And that is potentially a real danger for everything that these national democracies are wanting to build up, for instance, at the European level. And I think that is the biggest risk. The biggest risk is in politics. And where in politics? In national politics. And how do you tackle that risk? Not with technocracy. Not with technocracy. And technocracy is the panacea, or has been the panacea, in the last decades, since the end of the Second World War, for the European solution to political problems. But now we are experiencing the end date of that solution already for, I think, 20 decades. And that risk, we have to recognize that and first recognize it, then try to tackle it with a new approach. And that approach should be a political approach.
Applause from Joachim Bieterlich. 30 years ago, the Economic and Monetary Union was launched here in Maastricht with a strong belief that a monetary union would ultimately lead to economic convergence, that it would diminish economic differences between countries. What can we say about this now, Graham?
Well, first of all, a lot has been successful. I mean, the inflation rate, the replacement of the Deutschmark with a low inflation currency, great success until President Putin stepped in this year. It'll come back. So inflation is fine. Sound money, honest money, is not so certain. That's the problem. I started writing about these things in the 1980s, and public debt GDP ratios were 30% of GDP. They're now 90%, 3 times, at a time when ECOFIN finance ministers meet every month, and they write these fine conclusions, and you read the words, and eventually you fall asleep, and they do nothing. They have not done anything. And the net effect is that public debts have now tripled. What I was saying about the UK's risks, you can say, not to the same extent, but you can say the same about the Eurozone. Interest rates are on the rise. The average life of government debts is 6 or 7 years. So over the next few years, you will find that as these are rolled over, the old debts are rolled over, interest charges will begin to rise. And if they rise at a time when you are under pressure to keep the budget deficit static, or preferably going down, you're going to have to cut spending somewhere. Are you going to cut defense spending? Not today. You're going to cut healthcare spending, just as the aging population begins to come through into public spending. Difficult. What are you going to cut? These are very difficult problems, but the difficulty doesn't mean to say you can just keep borrowing money from the markets, because eventually the markets will say, how are you going to pay this back? I've worked as a bond market vigilante for 30, 40 years now. The bond market vigilantes never lose. You want to borrow their money, you're the demandeur. They won't give it to you, you have a balanced budget tomorrow. Very tough.
Benedicta, economic convergence. Can we say that the opposite has happened?
I think that a monetary regime per se does not deliver convergence, maybe some macro convergence, the stuff Graham was referring to, but not structural convergence. And I'd like to link this to what Professor Bitterlich mentioned earlier. We notice that in terms, when we look at structural convergence, that is the extent to which GDP per capita is distributed across Europe, what we observe is that there is more convergence across countries, meaning countries and regions in Europe are more similar. This is what the data are telling us. But that's not per se the result of monetary union, but of the political deal made in '88 that Professor Bitterlich mentioned of expanding the size of the EU budget and of structural and cohesion funds that have supported this convergence process. So if there's anything positive, it's partly due to the fact that we had these funds with an explicit distributive objective that have delivered cross-country convergence, greater convergence, even if within countries there is across-the-board evidence of rising polarization. But that has more to do with how individual governments have managed their own internal cohesions, policies and regional policies. Yeah.
Mathieu, haven't the recent crises, the euro crisis, the financial crisis, haven't they proven that our economies are not similar enough to withstand crises as a bloc?
Crises always tend to put an extra accent on differences. So crises are defining moments, and I think I agree with Benedicta very much. So this is a mixed bag. So there is some convergence, maybe not very structural. There has been a real effort to the structural funds to do something on the dimension of redistribution, but it was not enough. And then I think in the last years, in the last decade, so since the euro crisis, we had a very special new problem added to the list of the conversion issue as a whole. And that was that there was this moment where the euro was on the brink of collapse. And this moment lasted for a couple of years. That is how it goes with European moments. They are not moments, they're not flash points, but they last. And these couple of years, so the high point of the euro crisis, the question was, what are we going to do to save the euro? Actually, that is a very, very political question. It was a question about solidarity between people, between peoples, and between nation states. And so a question of solidarity is a political question. But what happened with that political question is that the member states they were afraid to take it on. It was too political at the moment. They didn't dare to go with this question to their own constituencies. And what happened then was that this political responsibility of the national democracies was offloaded to an apolitical, non-democratic institution, the European Central Bank. The European Central Bank, in the end, accepted this responsibility, but first said a couple of times, this is not in our mandate. We cannot do this. This is asking too much of us technocrats in Frankfurt. Nevertheless, it happened. And that made another problem, that made the problem of the convergence issue actually a bigger problem in the present times, because the solidarity in the real economy was not organized. The responsibility was shifted to the ECB. That means into the monetary domain. And the ECB the political responsibility was offloaded to the ECB, and the ECB took this responsibility into their own balance sheets, hid away this responsibility at the same time, because it was in the balance sheets, from the national democracies. So it was not legitimized in a democratic way. The only arena where this discussion was seriously raised was the Bundestag, but also up to a certain extent, because then the Constitutional Court in Karlsruhe started to put cold water on this, because it's so tricky and dangerous and risky problem for national politics. But this problem is a very real problem, because what we now have to do to deliver on the convergence, because convergence is important for the durability of the monetary union and the euro, is first to take back this political responsibility out of the monetary dimension into the political and socio-economic dimension, and start talking again about redistribution, the idea behind the structural funds.
Graham.
Yeah, I accept much of that, but isn't the real reason why the political class would not go back to their people and explain why we needed more political union, is that the generation of wartime people has gone, and Kohl, Mitterrand, etc. They've gone, and nobody now has that first-hand experience. And therefore they don't have the feeling there is something which transcends the next opinion poll, or the next even election. You have to do something. Now we have, Putin has reminded us in most graphic fashion that the risk of war exists. The EU was founded as a peace and security project. It's worked dramatically well, and we lulled ourselves, we sleepwalked into thinking it can never happen again. We don't need to worry about it. It's happened.
Very, very brief. Although I hate to quote certain political forces, I think we have been very decadent in this. And to make it personal, if I, as a somebody in my 40s, can understand this, then we don't need a generation of war survivors to explain this to us. But I agree with you that we have been very sloppy and not serious enough about keeping this context, as Professor Bieterlich called it, of this political, historical context, which is very relevant and urgent today, alive amongst ourselves. And that is something that we can revive. If I look around and in this polarized new political landscape, there is some seduction in the polarization, so forces are going that way, but there is also a very strong longing for an alternative story to that polarization story. But we do not deliver on that yet, and I think it's not impossible to deliver on that, and it's even not impossible to deliver on that through a generation that didn't experience the war. But I agree with you, it hasn't been proven up till now that we can.
Mathieu, you say politicians have to step up, to the plate. Benedicta, does NextGenerationEU, which is politicians deciding to step in, help towards achieving a more economic union?
Possibly. The Recovery and Resilience Facility is an interesting experiment. I wouldn't agree much with the idea that politicians have been sleepwalking, because I think that the choice made ex ante was not having a federal union, not having the United States of Europe. And once you've taken that decision, what you do is move from one compromise to the other to make sure that the EU remains alive and survives. Now, in this particular context, the Recovery and Resilience Facility is a compromise, but I think it's a very clever compromise, because it was created in a context of the pandemic, where everyone realized that there were long-term risks, and these long-term risks, I'm mainly referring to debt sustainability of certain countries more than others, were more pressing than the short-term risk we had seen after the financial crisis, where European institutions had to respond to convertibility risks, which were very short-term. The RRF is intelligent because it does see that there are long-term risks looking ahead. And it does create this, albeit temporary, supranational debt that is, the first step to a fiscal capacity, which I think that the monetary union would need.
What should be the next step?
Possibly making this instrument permanent whilst changing the allocation key. So the RRF works in the following way at present. 70% of the funds are allocated to countries with lower than average GDP per capita. So it has a redistributive dimension, mostly because the legal basis on which it has been built is the same legal basis of cohesion policy. So it is copying much of what the structural funds are doing. The remaining 30% is this anti-cyclical component, meaning that 30% of the funds are going to countries that have suffered during the pandemic in terms of output losses. So if it has to become permanent, it should leave redistributive objectives to structural funds and serve primarily as an anti-cyclical instrument.
Mathieu, I saw you wanted to react.
No, I almost fully agree with what Benedicta now has said, and I think the key thing is making it permanent indeed, and making it permanent this redistributive kind of goal that is inherent in it. Two things are here important, I think. One is talking about a permanent EU recovery fund in this country is a taboo. Is a taboo. Tells you something. Tells you something about the European Bildung that I tried to raise, the point that I tried to raise earlier, but also about the political kind of fear to raise the key issues still, although the circumstances are so pressing, even more pressing than they were when the fund was set up. So that is something to take note of. The other thing is, I really think I'm very positive about the potential of the fund. So I agree with you. And I think that's also important to share. This is the E of EMU. Also, because there are elements in there, and something that you didn't mention is, for instance, the SURE fund, the fund to help people who are temporarily unemployed with benefits on a pan-European level of redistribution from the fund, coordinated on the European level. That, to me, was a Rubicon crossing, because it was the first time in the history of European integration that the social promise, which is the real promise to the people of Europe, The first time in the history of the European integration that the social promise was taken on the European level and is now coordinated, although it's still very small within the fund as a whole. It's very meaningful potentially because it's taken on now on that European level. And I think if that Rubicon crossing now can lead to a further kind of fleshing out of this social dimension and also crystallizing of the impact it can have in the socio-economic sphere, so not in the financial economic, but in the socio-economic, there where the people live, where you can make a difference in the life of the Europeans who have to struggle at the moment for this or that reason, then there is a real potential there to do a lot of things at the same time, because this is the channel to which you can reconnect the national democracies potentially to the European project of the moment.
If I may quickly react, I strongly agree with your appreciation of Sure, and what I was referring to earlier, the idea of changing the allocation key is really making the RRF more similar to Sure.
Okay.
I absolutely agree. There's a question of political feasibility. I think it's a problem here. I assume it is a problem in Germany. It will very much depend on whether there is an agreement on own resources. Because if you make a political agreement on own resources, then it would become permanent. And the very same countries, I'm thinking of Germany in particular, that might be against this instrument being permanent, have an interest in own resources because the default option is that net contributors such as Germany will pay more into this budget in order to pay back debt. So again, I stick to my initial statement of this compromise, the RRF being very clever because it ties in different, multiple objectives and apparently contradictory objectives at the same time. Locking in certain actors that might have an interest ultimately at the end of the road to make this instrument permanent.
Graham, what's your outside view on this?
Well, I have two comments, actually. First of all, if there's an objection to something being permanent, then make it temporary. If it works...
And just roll it through.
Then I think I'm right in saying the funding of East Germany is still on a temporary basis. That was a little while ago now. So if it works, you'll just roll it over. If it doesn't work, it gives you the out, so that that gives you the confidence that you're not completely committed. Now, the other thing I would say is this is all too small. I know 800 billion, well, that sounds like a lot of money. We forget, or we don't know actually, that Europe is a big place. We have a GDP, Europe as a whole, EU as a whole, well, Europe, if you include the UK, we're up to 17 trillion. I shouldn't include the UK. We're up to about 17 trillion, not billion, trillion. We have banking assets in the Eurozone are 33 trillion. Investment fund assets are 25, 26 trillion. So when you're talking about something less than one, this isn't touching the scale of the economy. It can be funded. There's no doubt of it. We've got the savings. That's why we have the current account surplus. But if we're going to be, we need the political will to be bolder. We've got the money. We need to do something bigger. And everyone just thinking, and my offhand, I can't remember the size of Dutch GDP. I won't embarrass anyone by asking.
No, absolutely not, Graham.
But if you're sitting here in Holland thinking about things and you hear that 800 billion of European money, hey, that sounds like a lot. It's probably the same size as my GDP. But for Europe as a whole, it's small. We need to think about European dimension, European scale. And then we realize, actually, we are a big, and I include us here, we are a big region. Just realize that.
Point taken. I want to take you to the next subject of debt sustainability and the pathways to SGP reform. The crisis of the recent years have led to increased public spending, and that has caused debt levels to rise in all member states. In his recent speech, on Europe in Prague, German Chancellor Olaf Scholz addressed the dilemma between spending on the one hand to transform economies and fiscal discipline on the other to bring down debt levels, which brings us to the Stability and Growth Pact. In a few weeks, the European Commission will propose orientations to reform the EU rules governing member states' budget deficits and debt. So it has been argued that the Stability and Growth Pact rules, as we know, enforce pro-cyclicality in high debt countries, meaning that countries that go into a recession, instead of stimulating their economies, will start cutting debts, which leads to a deeper economic downturn. Benedicta, why is it important that SGP reform supports growth that is counter-cyclical?
Yes, first of all, it is important that the reform takes place, because would this not happen, we'll go back next year to the old rule-based system, which we can't afford at the moment because we're starting from debt levels that are much different from when the system was designed. It is also true that there are lots of clauses in the recent Growth and Stability Pact that allow countries to deviate from the standard, objectives. We know the 3% deficit and the 60% debt target. But that makes the package very complicated. And I think to leave it as complicated as it is very risky, not from an economic point of view. It's not about pro-cyclicality, but it's risky from a political point of view, because if you allow so many factors to be considered when judging debt sustainability, it means that the Commission strongly requires assistance from member states that provide the relevant information, with the risk that in this complexity, the Commission either becomes very politicized or an empty shell. So the reform should take place and should go in the direction of simplifying rules, indeed for the purpose of avoiding this, political threat, which is a commission that is not the super partes authority defending the European instrument that we should be there. Yeah.
But what kind of reform should we be aiming at then, if you want to make it simpler?
Yes, simplification would mean to me that you come up with an anchor, with a guiding principle. I mean, it's in many of the proposals that are on the table. And this guiding principle should be debt sustainability, which partly means that, responsibility for monitoring the situation should slightly be transferred from Brussels to capitals, because they have the required information, and possibly be, preserved that sustainability not on a yearly basis, but over the medium term. So over the medium term, countries should prove able, maybe stick to some deficit target, but not with a random number, but a target that allows that sustainability, that is instrumental to achieve that sustainability, rather than a fixed target that may or not deliver.
But if there isn't a fixed target, is it a very clear, then you can always move your target. Isn't there a risk?
You can move it. Yeah, there's always a risk. You can move it provided that the underlying analysis shows that the new target provides that sustainability. And it is very risky.
If that is if you keep that with the national governments.
No, I was going to suggest that there should be more of a shared competence, not a full transfer, but more shared competence between the Commission, the fiscal board that we have at the European level, the government, individual countries, and the many independent fiscal councils that we have at the national level in many cases. So I see lots of institutions, both at the European and at the national level, being possibly able to supervise with targets that might be quantified if necessary, but are country-specific, and they ultimately are instrumental to achieve that sustainability. That is
Graham.
the idea.
Can I put on my hat as a bond market vigilante?
Of course. Go ahead.
This has failed. For 30 years, it has failed. The words are there, the treaties are there, the directives from the Commission, etc., the fine words from the finance ministers, they have not achieved. The level of debt has gone up, and as I said, it tripled as a percent of GDP. And I said earlier, as we move into the time period when aging population is demanding more public health spending, and interest charges start going back to normal, they may now be 1 and 2% of GDP. They used to be 5 and 6% of GDP. And they're going back to that over the next 5 or 6 years. The bond market vigilantes, who, by the way, yes, they may be personified by George Soros and hedge funds, but in reality, their money comes from the pension funds and the life insurance, etc. We forget, or people don't know, that the financial system has a series of liabilities from life insurance companies to citizens. The citizens give them some money and they promise to pay back pension or whatever it may be at a certain time. That is a promise to those citizens, and they expect the money to be invested in something which can be used to make good on the promise. That's the entire concept of financial regulation. So if the financial institutions then go and invest in government bonds which don't pay back on time, or try and inflate the bonds away, the value of the debts, that is a fundamental problem for the citizens, particularly the aging citizens, and they don't like it. So this is where the sustainability question comes. The vigilantes eventually will say, we've heard enough of your words. You've actually, in the end, you've got to the point where you can't do anything about it. And I'm afraid the UK is going to, there's a very, very real risk that the UK will demonstrate this over the next while, and let that be a lesson. And Greece was a lesson to Europe. The UK may turn out to be a bigger lesson, a much bigger lesson to the world, actually. You can't go on having public debts for very good reasons, for very noble reasons, very nice reasons. We're all nice people. But in the end, if you want to pay something out, it's got to come in taxes. And if you don't want to do that, you can't do it. Harsh, nasty, but that's the truth.
Fully agree, fully agree. So the context here is that we moved from a tax state to a debt state. And that is already happening for decades, since the liberalization of the capital markets. So mid-1980s, then step by step, this was done. So I think, and that is the real issue here. And I agree with you, Benedicta, that set figures or targets should not, that is not a carte blanche to stop thinking. You know, these are set figures. We should do the work that is behind or should be behind these figures, namely the analysis, and that should be the guiding information for a new and simpler stability and growth pact, or how we would call it. And I think there are some important initiatives here. We have to wait for the orientations of the European Commission, of course, but I think it was important that the Dutch finance minister made a first move, here in Maastricht, to open up the discussion. That was for the first time in 25 years that the Dutch said, we want to talk about something else than 3% and 60%. We want to talk about reality. That is important. It was noted in Brussels. And it's also done in a coalition with a new coalition, you could say, with countries like Spain, for instance, also thinking about, with the Dutch together, about a reform of the Stability and Growth Pact. I think it's very important because this is, Stability and Growth Pact, Professor Bieterlich said it, it was 1997, 1998, that Helmut Kohl desperately needed this to sell it at home. Desperately. If there was a referendum then, there was no referendum in the early 90s. It was also, voted away by the German population. Sure thing. So this political issue was never solved. solved. It's now back, and we should tackle it. And you have all these economics talking about death and how to understand death, but in the end, death is not that complicated. You have different schools of going about the problem of death. So you had Ronald Reagan who said, I think the budget deficit is big enough now to look out for itself. You have, of course, people saying death is no problem. Yes. And you have people who say, if you are in death, then it's high time that you get depressed and start with all kind of masochistic new ways of designing the future of your life. I think, all these approaches are very stylized approaches. So I agree with Benedicta that what we really should do, and I'm looking forward to the orientations of the Commission, I don't know what will be in there, but is going back to the heart of the matter. And that didn't change. What did change was the context. We moving from tax state to debt state and not recognizing that. So first we have to recognize that and then go back to the heart of the matter and try to find some elegant and simple solution. But I'm very interested in what you wrote about that, Benedicta, because we need the inspiration for that. I think it will be very complicated.
Just a quick reaction.
Yeah.
Graham said rules didn't work because we have seen rising debts, true, driven by the pandemic. And then you mentioned the only country that was never under the EU fiscal framework, the UK. So if anything, we can say that the EU fiscal framework is neutral because, we don't have proof that it either accelerated debt accumulation or stopped debt accumulation. What I think we may agree on is that we need to make sure, again, I go back to domestic politics, we make sure that electorates would reward politicians that take care of debt sustainability. Because debt sustainability means that you don't leave debt to your future generations. It's about intergenerational solidarity. Mm-hmm. And I would like to see a wise electorate that is not voting in favor of those that agree on additional deficit spending, but those that make sure that future generations do not have to pay.
Can I recommend that you go canvassing? Go out on the streets. The UK has a particular history at election times or referendum times. Not that we have many of those, thank goodness. But you go out and you canvass on behalf of a political party. I'm from Lib Dems, and you go and knock on doors, and you ask if you can have the support of the person who opens the door for your candidate for Parliament. And the idea of a wise electorate will disappear in moments. I can assure you. I'm sorry. With the referendum, going around talking to people on the street about it, people were in tears, saying, well, I have no idea. I voted now by post, but now what you've told me I shouldn't have done. But I have no idea. I'm a dustman or something. How have I been asked to make a decision like this? I can't begin to believe it. So this is a problem of mass democracy. And I'm in favor of democracy, of course. But you run into limits of it. And the wise democracy, I always used to think the UK overall was a wise democracy. But when I went canvassing for the referendum, I lost that confidence in moments. Try it. It's very, very humbling, I can tell you.
We have discussed possible pathways for reform. The execution of the European fiscal policy is now in the hands of several institutions and decision-making bodies. But Mathieu, what do you expect in terms of a change in the institutional setup that supports this EU fiscal framework? Why is it important also, there it is again, for the trust of European citizens in the EU?
That is a very difficult question, actually, and I agree with what Graham said, and let me pick up on that to try to answer this question, which is a very technical question also. Jean Monnet, the inspirer of European integration, once said, and nothing is possible without men. Nothing is durable without institutions. So this institutional dimension is very important if you talk about things like intergenerational solidarity, for instance. And this is what's now at stake because of the polarization of politics. You know, the focus is on short-term wins, not only in politics but also in economics, and to a certain extent we've made the system, you know, grow in that direction. What we need now is wise decisions for the longer run to keep what we have built up, the good things of it, and that are quite a lot. But the institutions that we have to do that are at the European level, and here comes the problem. These institutions are young institutions. Professor Bieterlich said, you know, the euro is only 20 years old. That's very young. The European institutions are also very young. They just survived one generation. Their collective memory is now in a sphere that goes beyond one generation. But the collective memory of other groups and communities, for instance, the nation states, is so much deeper. That goes sometimes centuries deep and not decades. If times get insecure, people are looking to build institutions to weather the storm, so to say, but often they fail. If times get insecure, like these times, people look for anchors, and they look for the institutions they have built in the past. And now they have this choice between nation-state institutions and European institutions. And the instinct of many people will be to go to the one with the deepest collective memory, because they know that has weathered storms already in earlier histories and wars and things like that. So that is the instinct. And I think, you know, this kind of summarizes the challenge, and come back to my original point. If we want to succeed to redesign and put in place new institutions on the European level for these enormously important tasks of, for instance, intergenerational solidarity, or for instance, control over debt. The only way to come there is through the member states. Through the member states. And as long as in the politics of the member states, this European dimension is not an integral part of the national, you know, sentiments, feelings, fears, hopes, then we will fail. Because then these institutions will be perceived, these institutions at the European level, will be perceived as Kafkaesque, empty shells, as you put it. So I think we come back to the same point again, how technical the problem is. We are very good in tackling technical problems in Europe. But now the new challenge is to connect these technical problems and their solutions to political credibility. Yeah. And that is a totally new challenge, actually, at the European level. We don't know how to go about it.
Are you optimistic?
Sometimes yes, sometimes no.
Because you don't really sound optimistic.
I'm worried, but I'm, for instance, very optimistic about this, the potential of the fund, as we discussed. I agree with Graham, it's not big enough, but it's like a seed, you know, of a new institution that could work and that could fill the E of EMU, and through that could deliver to people what they expect of an undertaking like this. But we also need the how shall I put that, we should put a soul in those institutions, a soul that can be recognized and felt, and that is lacking, and that is, you know, that's very difficult to talk in a technical way about this, how to go about this. It should happen or not, and one thing we know, nothing is possible without men, so we should do it, the people should do it, But how, that is a very difficult question.
Graham,
Yeah.
final remark.
Oh.
Yeah.
Can and should the European Parliament play a role in creating that soul? We've just had the conference on the future of Europe. There's general agreement in many places, but not necessarily in the member states, about the idea of treaty change, which might remove unanimity. And that would give the Parliament a much bigger role. And we see in all countries, over the centuries, as well as decades, that the role of parliaments has gradually accelerated and provided that national soul. Could that be a mechanism?
A very interesting question, thank you. I think yes, with all the caveats around it. Because to put this very brief, maybe an example. I was asked a couple of weeks ago, of course a couple of months ago already, oh, we have a war in Ukraine, war on the European continent. We need a European army. Let's start a discussion about that, European army. Of course, it's a relevant discussion, but I think, I thought about it the last months, and I think, what we never realized is a European army. And this morning we discussed why. And there was this warning of Helmut Kohl, and that warning was to the point. What we did realize at moments of Zeitenwende, for instance in 1991 in December here, is treaties. This is something that we can do. And I agree with you on that. There is a potential, but not more than a potential. So if you are in a hopeful mood in a certain day, you see a lot of potential there. If you are in a more pessimistic mood, you are afraid of all kinds of other examples. But I think that is the way to try to pull this off. So I agree with you, actually.
I want to open the floor to questions from our public. And I already see one hand. So I don't know if you have a mic or if there is someone with a mic.
Yes.
Otherwise, there it is.
Or speak very loudly.
Yeah. And I want to ask all of you just one question so you can give everyone the opportunity to ask a question. Yeah.
Yeah, thank you very much for this discussion on fiscal policy, which I think is also very timely because we celebrate actually this year the 25th anniversary of the Stability and Growth Pact, although you never hear about it. Professor Marzinotto mentioned that the Stability and Growth Pact has become very complicated. There are many exceptions, and that's indeed true. But of course, these exceptions have been added by the member states themselves. And in the end, I think it is also a question of national ownership. What do you do with fiscal policy at the national level? I mean, we can have a very nice Stability and Growth Pact and reform it, but when then the Commission says, oh, this is France, we're not moving ahead with sanctions, it doesn't really work. So it needs to be embedded, I think, at a national level. And that was, of course, also the intention of the Fiscal Compact that asked member states to put in binding legislation structural balanced budget. Correcting for business cycle movements and one-off factors. If everybody did that, then public debt would gradually rise under normal assumptions about interest rates and growth. So I think that national ownership is here an important element of taking seriously what also the Stability and Growth Pact wants, namely sound public finances.
Do you want Benedicta to comment on that, or do you have a specific question?
Well, I'm not sure it was a question, but I have a quick reaction, and that is that I totally agree with you. I mean, in my conversation, I talked a lot about rules, how they should look, and rule setting, but you're right. The problem is one of enforcement. It's not about rule setting. So whatever rule you have, then the question is how member states are going to translate this rule at the national level. And in my view of how things should look like in the future, when I said let's have a formal shared competence, I was having this sort of thing in mind where there is a government that feels responsible for that sustainability, that takes ownership of fiscal policy, irrespective of yearly targets, and delivers over the medium term this sustainability objective. That's the idea behind. But I totally agree, it's an issue of enforcement. It has to do with how well prepared politicians are, how independent fiscal councils are. Independent fiscal councils have been implemented across the board. Mm-hmm. They are compulsory in theory. They're not everywhere now active, and they're very different from country to country because countries have different technical capacities, different managerial capacities, different administrative cultures. It takes time, but I think you're absolutely right. There's a need to strengthen national ownership and do it using domestic institutions.
Are you proposing an institution next to the European Commission actually to do this at the European level? Because that was a suggestion that is in some of the Dutch and Spanish.
There is already a such institution, which is European Fiscal Board.
Yes, I know, but to kind of pump this up to a board that can enforce things, or an institution that can enforce things in the domestic realities?
I wouldn't go that far. I think there is a need for an intense co-management of fiscal policy that leaves the final word, I think, to national governments. This is very important, because looking ahead, when it comes to that sustainability, we should not achieve that target by, horizontal cuts. That's not the way to go. What is going to be extremely important is the composition of spending. Mm-hmm. So what you decide to cut, what you decide to increase, and composition of fiscal policy is about cultural preferences. It needs democratic legitimacy. Mm-hmm. So that's why I think that empowering national governments is extremely important. Yes?
Benedicta, I beg your pardon. I think what we have to learn in Europe is co-management. You used this word. Yeah. You look at our actual institutional framework. There is no co-management. Brussels, for many at the level of a nation state, are the against us. It's another world. And the national debate is developing to, let's say, in a different world. And you are right, what we need is real co-management.
Final question, here, front row.
Thank you very much. My name is Jarl Friis-Madsen. I'm the ambassador of Denmark. And of course, being in Maastricht is a bit traumatic for me, as we voted no to the Maastricht Treaty. And there was actually a clear majority until 3 days before that referendum. And ever since, we have been working with the consequences of that. Thank you for a great discussion. I'm thinking a little bit in terms of what all the panelists said, that there were not total consensus, but of course there is this increased debt level, and some of you will say this is not sustainable. I didn't hear, I don't think I heard very clear proposals for the revision of the Stability and Growth Pacts in order to bring down debt. And if you look at the Dutch-Spanish paper, it has many good ideas, but for example, it is actually letting go of the 1/20th reduction mechanism, so that is not reducing debt. So I was wondering if one in the panel has a concrete proposal apart from that you betray future generations.
I assume.
I'm looking at you, Benedicta.
Step in. Right. What I think is going to be there in the Commission proposals, Mathieu said, let's see what's in there. It will be something about public investment. The Recovery and Resilience Facility stem from the recognition that public investment is a win-win, because you support growth in the short term whilst also doing something for long-term growth, which is what you need for that sustainability. So definitely some type of rule that would take public investment out of the computation of the 3% deficit is certainly required. And I would go even further than a permissive rule that says, you know, if it's public investment, it's good. I would go for something more positive, because the risk that we're going to face starting from 2026, when the funds stop coming in, is that governments, national governments, specifically with the purpose of cutting deficits and in turn debts, will cut public investment. Because there's no constituencies, there's nobody behind, there's no concentrated interest. So if you have to go for budget consolidation, the first thing you do is cut public investment. We need to avoid that, not only with a permissive rule. Yes, you can invest and go above the 3%, but even with something more positive and compelling by forcing governments to do public investment. And if they do public investment, you have access to a recovery and resilience facility that is permanent. So my ideal, if you want a concrete proposal, my ideal governance framework is one in which the recovery and resilience facility is made permanent, and you can access the recovery and resilience facility, those funds, only if you prove you're not cutting down public investment, and de facto make the two types of investment, national and European, through the EU budget complementary, and avoid creating substitution between the two, where I act as a permanent recovery and resilience facility because I don't want to use my own money. And that would solve lots of the political problems inherent to making the recovery and resilience facility permanent.
But you need that fund for this. So this,
Absolutely,
this could be the recovery fund, but could also be a European monetary fund, for instance, which
exactly.
And that is the crucial part that is lacking. Because, if I may, I want to add one historical thing here. Because if we are discussing this, actually the redesign of the Stability and Growth Pact responsibility, then I think it's very important to note that the Stability and Growth Pact was never in the treaties. But the Stability and Growth Pact was an appendix to the conclusions of the European Council in 1997. And that made it a political thing. And then there was this clause brought in by the French, of course, where there were these words, les circonstances. So we have agreed on this, but there could be circumstances in which we decide politically, by majority voting in the ECOFIN, that we put aside all the agreements. And that is the key political thing that we have to solve now, is how do we go about this actually political trap, that by politics of the moment, all these beautiful designs can be put aside. And one evening, or was one evening, that Chancellor Schröder needed to demontage the whole. And Chirac, of course, but he was waiting for that already years, so he was waiting for the German Chancellor to move. So I think that is, that is adding to your proposal, which I find very, very relevant, interesting, and I also agree with it. This is very important that we arrange it in the treaties in such a way that it can become a reality.